Breathe better and sleep deeper with the Levoit Classic 160 Top Fill Humidifier. Don't wait. Check out the link in the video description to get your Levoit Top Fill Humidifier on Amazon today and enjoy a healthier, more comfortable home.
Hello and welcome to DeFi Digest. Today we're talking about how Oracle technology can help bridge the gap between decentralized finance and anti-money laundering regulations. You might have heard that DeFi platforms and regulators are struggling to find common ground on AML policies. While it's true that implementing effective oversight in this space is a major challenge, there's a growing recognition of the importance of regulation, both from industry players and regulators themselves. But how can we balance decentralization with legal obligations? One innovative solution is using oracles as part of an atomic transaction. An oracle brings external data into DeFi applications, enabling transactions to achieve consensus with off-chain information like KYC assessments, watch lists, blacklists, sanctions lists, transaction monitoring, and more. Imagine a scenario where a user initiates a transaction on a DeFi service. Before processing the transaction, the service must ensure it complies with AML regulations. That's where the AML oracle comes in. The DeFi service requests an AML check for the user's address and associated data, communicating with the AML Oracle smart contract for a KYC assessment result and transaction risk rating. But how do traditional AML policies fail in DeFi? Well, one key limitation is that smart contracts can't make decisions based on external information. They're limited to the data available on the blockchain they run on, which means they can't connect to other blockchains or external sources like websites or APIs. If smart contracts could connect to the internet, it would introduce security and operational risks. Think manipulated or false data being fed into the system. Instead, oracles bridge this gap by allowing DeFi applications to access external data in a secure and trusted way. Let's dive into how it works. When a user initiates a transaction on a DeFi service, that service requests an AML check from the oracle. The oracle then conducts the check using both on-chain and off-chain data before writing the result to the blockchain and providing a reference for the smart contract. Now here's where it gets interesting. All of these steps occur as part of an atomic transaction. That means either all the steps succeed or none do, ensuring no partial or inconsistent state is left. This guarantees the integrity and security of the transaction, eliminating the risk of system failure from a compliance officer. For example, if a user's address appears on a sanctions list, the swap transaction would be automatically canceled by the blockchain's rules, without any need for human intervention. It's a game changer for DeFi systems that want to integrate effective AML solutions. So what does this mean for the future of DeFi? Well, achieving this goal will likely require time and effort. But one thing is clear: oracles can be considered a universal technical solution for AML embodiment in DeFi. And that's exactly what we're seeing here: innovative uses of Oracle technology to bring DeFi platforms into compliance with AML regulations. Thanks for tuning in to DeFi Digest. If you want to learn more about the latest developments in DeFi and how they impact your portfolio, make sure to follow us on Twitter or Facebook.